Hey there everyone, welcome back to another market update from CW Real Estate. I'm Cody, a realtor here in Idaho Falls. This month we're looking over September. We're going to look at stats, talk about a little bit about interest rates because the Fed just came out with some news last week, and we're going to look at home prices, show you some real world examples of some past solds this last month from the lowest, middle, and highest part of our market. And I'm even going to talk about a little bit about our two presidential candidates, look over what they've put out there, what they're going to do to try to help the housing market. So let's dive into it. We're going to start off with home prices. Okay, so here we have our 12-week home price chart for Idaho Falls. Home prices are up 6% year over year, which is going against the normal seasonality so far. What we usually see, as you can see here, is a downtrend usually at this time of year, aside from 2021. So it looks like we are kind of following that 2021 trend line. This could be because we've had some positive news on interest rates, and that it could end up having home prices go a little bit higher there. So moving on here, this is our lowest sold for the month of 160,000. It was a 3-bed, 1-bath, 2,990 square feet, built in 1916 on 0.18 acres. So this house is needs a complete renovation, as you can see, in very rough shape. But once it is updated, it's going to have a lot of equity depending on how it's updated. This is our median sold price this month, $397,000. 4-bed, 3-bath, 3,496 square feet, built in 1960, and it was on 0.29 acres. So this place is the opposite, has been totally redone. Looks pretty nice on the inside. Looks like they did a full remodel. And here's a shot of the backyard there. Looking at our top of the market this month is 1.535 million. 5-bed, 4 full baths, and a 1 half-bath in there. 5,284 square feet, built in 2018 on over 10 acres, which is a lot of ground. This place was really nice, kind of a farmhouse vibe, pretty nice view and everything out the back as well. Diving into our chart here, we're looking at August numbers compared to September, and we are seeing a decline across the board, which is sort of in line with the seasonality. We're going to look at the price different, or the percentage difference, here in the next slide. So we are at 362 total active single family listings, which is 9% up from August. So we are seeing a few more listings than we have the last year. 12% down on new listings though for August, and closings are 1% up from August. Pendings are 23% down from August, and our months of inventory, or the turnover rate in the market, we're tied 3.1 months based on September, and if you look at the average over the 4 months. So that's a little bit up than it has been, but really this is still a seller's market. But again, this is higher than we have seen for quite a while. So a little bit more balanced than we have been, but not a lot. New listing average price, we're at $481,000, down from $506. Our median sold price is at $397, down from $409. So a little bit of less there for our median. Homes under $300,000, we're at 40, and $300,000 to $400,000, we're at 82 listings. So a little more competition in these price ranges, so that's a good thing. Average days on market, we're at 51 days, up from 43. So this could be seasonality. This could just be a little bit of a slowdown. A little too early to say there, but we are up a little bit more on days on market. If you're looking at selling, I do this to show you, depending on your price bracket, what the days on market are per price range. So 0 to 400,000, we're at 40. 4 to 6, we're at 53. 6 to 8, we're at 36. And above 800,000, you're looking at about 114 average days on market there. There's a news last week. If you don't follow me on social media or have my weekly email, I talked about this. The Fed came out and they slashed the basis rate by 0.5 point, which the markets had kind of already took this into account because the news was kind of starting to come out that it seemed like this is what they were going to do. They base this off of inflation coming down into their closer to their target range, and the job market had started to slow, so they didn't want to make sure that they overcorrected this, so they cut the basis rate. We have seen some favorable action in the interest rate market. I've seen 5.7 today. It's back up a little bit to 6.2 to 6.3%. Can't quote rates. If you want an exact quote, reach out and I will get you in touch with some local lenders that you can help you out. So overall, this is positive news for interest rates and sort of the economy in general. One bad caveat to this is that interest rates come down. We're still at a low supply. This could increase demand, which then forces prices to go up. But it depends on how you look at it. It's really hard in real estate, honestly, to have your cake and eat it too, have low interest rates, low prices, and low competition. That's just not really usually what happens. Okay, then with the election coming just around the corner here in the next 4 to 5 weeks, I wanted to just touch base on what each candidate has planned for the housing market and just go over it. I'm going to try to be objective, not trying to sway you either way, but I just wanted to put this out there. I'll also post a link down below so you can go and look at the entire plans that each candidate has put out. Starting off with Kamala Harris's plan. So this is in her economic plan that she's put out is about 10 pages long, and each of these that I have numbered has a substantial amount of paragraph underneath it explaining it more in depth. I'm not going to go that far into it. So first up, we have unlocking 1.2 million new affordable rental homes through historic incentives for the private sector by expanding the low-income housing tax credit. So it's taking an existing program and expanding it to try to help with this situation here. Creating a new tax credit to rehabilitate affordable housing for homeowners who want to stay in their communities. So what this seems like to me is it's if you want to do some home improvements, there's going to be some different tax advantages to that available for you to try to help people fix up their houses that they're already in. Building up supply through the first ever tax incentive for building affordable homes for first-time home buyers. So this is basically going to give you a tax incentive if you're a first-time home buyer for building a home. So launching a $40 billion local innovation fund for housing expansion. Now this one is fairly complex when you go read through the paragraph that they have on this. Next one, taking on algorithmic price fixing which distorts markets and ending unfair practices that help large corporate landlords dramatically. So this one is large landlords are able to use a software that certain companies put out that artificially just raises rents by itself and no human input, and then it seems like that way you don't have to then look at it and then do it. The software's just doing it, so it's much easier and faster, and it's essentially just raising rent prices like crazy. So next up, we have stopping Wall Street investors from buying up and marking up homes in bulk. So if you go in and read more about this in the paragraph, it's really just wanting to look at people who have over 100 homes themselves or corporations that are trying to buy homes that already have a large amount of homes in their portfolios. So large-scale investors mainly. Next up here is one of the bigger ones and possibly one of the most helpful, expanding home ownership with historic $25,000 down payment assistance for first-time home buyers. So we already have FHA loans, but you usually have to come out of pocket with 3.5% down. This is going to give you $25,000 down for those down payments. So that could be huge for a lot of people that are struggling to save up that 3.5% for their down payment. Moving on here, we have Donald Trump's housing plan. Housing affordability to help new home buyers. Republicans would reduce mortgage rates by slashing inflation. I would like to point out one thing I would ask someone is, inflation is already under 3%, which is a normal inflation rate. So I'm not sure what else can be done there. So that's a question I have. Open limited portions of federal lands to allow for new home construction. Don't know how much of that there could be. So that could be a help in opening up new land that has been unavailable. Promote home ownership through tax incentives and support first-time home buyers. And cut unnecessary regulations that raise housing costs. So this last part seems pretty comparable other than lacking details. I almost feel like I'm gonna come off biased somehow, but this is literally pulled off of the tax plan, or Donald Trump's plan. This is all he has laid out, at least in literature that's available on his website. This is it. The one paragraph here. And so like you could read into some of this stuff. I wish there was more details. But that is all I have for this month. A little bit more in depth than I usually go into on some of this stuff. Let me know what you thought about this, and all my information is down below. If you'd like to get in touch with lenders, like I said, reach out. And I'd be happy to help you whether you're thinking about buying or selling. We can get on a call and talk about your plan and see where you're at and come up with the best way forward for you to become a homeowner, or whether you're selling, moving into a new place here, or you're talking about moving out of state. I can do it all. So feel free to reach out anytime. Thanks for watching.